Everybody says you can't live in a Bitcoin. And of course, you need a house to live in, but there are substitutes to houses. There are no substitutes to Bitcoin. There's a possibility that your property could be left vacant for a very, very long time. Fewer and fewer Bitcoin are going to chase an increasing number of houses in the markets. With dollars, it's different because dollars can be printed out of nothing. They can keep being printed, meaning that over time, more and more dollars are chasing houses, so prices go up forever. And that's why I think we have a distorted view of where housing prices are going to go in the future. So millennials struggled. Gen Z is struggling even more. Gen Z don't even think that they're going to be able to buy houses, right?
Right.
Gen Alpha, they're going to struggle even more, right? And then what about their kids? And then their kids, and then their kids. It's just going to get worse and worse. Nobody's going to be able to afford anything. And is that the world we really want? Doesn't matter what you do to make money. Just put a portion of it into Bitcoin. Eventually, I'm going to get disrupted by somebody who's way better than me. At that point, my business may die off. But if I buy Bitcoin, nothing disrupts Bitcoin. So you get basically a 150% boost in your portfolio value, just because you put 1% in Bitcoin. Again, it's a completely broken system. It's a system designed to incentivize the hoarding of houses. And morally, I think that's completely wrong.
All right, welcome to the show. I'm your host, Khalif Harold. This is the Real Hard Money Podcast. I have a special guest today, Rajat Soni, CFA, the Bitcoin trailblazer, lighting up X as Rajat's on finance. His bold predictions like house prices tanking to utility value on a Bitcoin standard have sparked a global buzz on X, racking up thousands of views and heated debates. With a decade in finance, Rajat's here to unpack Bitcoin's future. He's unfiltered, he keeps it real, it's why I like him, and he doesn't hold back. Rajat, welcome to the show. It's an honor.
Thank you so much for having me. Appreciate it. This is going to be great.
Yeah, I've been looking forward to having you on for a long time. I've seen you on X, just dismantling a lot of people fudding Bitcoin and the misconceptions. And, to do what we do, it takes a lot of passion and conviction to keep doing it over and over again. We'll get more into that later, but I wanted to just jump right into the meat and ask you some real questions, if you don't mind. You often talk about Bitcoin as a better investment than real estate. Your posts like the one on June 3rd about house prices dropping to the utility value on a Bitcoin standard suggest a radical shift in how we value assets, So how do you define utility value for housing in this context? And what psychological barriers do you think investors face and letting go of real estate's traditional role as a wealth anchor?
So what I mean by utility value is just the use case. So if somebody wants to live in the house, that's the value. That's the utility value. So using it as shelter. Today we don't just use houses as shelter. We use them as a savings vehicle. So we use them to save for the future. We hold on to them. We buy as many as we can. I saw a post just yesterday where a guy said, "Oh, this is my third property. It makes no sense to just keep buying more and more houses." Because number one, you can make more houses, so the supply of houses isn't scarce. Number two, I would rather just have people who want to live in houses be able to afford to live in a house, right? Because right now, if you think about it, some people can buy 10 houses, 100 houses, 1,000 houses, while there are other people who can't even afford one. And that's a broken system, right? The way that I see it, saving in Bitcoin is a much better decision because Bitcoin is specifically designed to be money. It has no physical utility. You can't do anything with it physically. You can't use it as a paperweight. You can't use it to live in. It's just money. It separates utility from money. So it separates everything that we need to use on a day-to-day basis. Let's say, for example, we used gold for money for a very long time, but gold can be used in industrial processes. It can be used in jewelry, right? So we were using gold as a savings vehicle. People just hoard as much gold as they can. They just throw it in their safe and it's just there. We're not using it for anything. On the other hand, with Bitcoin, you specifically use Bitcoin as money. You use it as a savings vehicle. We don't need anything else as a savings vehicle because Bitcoin is the best savings vehicle. So what this is going to do is, number one, it's going to lead to the price of everything decreasing over time in terms of Bitcoin. And you can see that in charts. You can see that the price of a house, the median house in the US went from something like 1 million Bitcoin, 600,000 Bitcoin, 60,000 Bitcoin, all the way down now to under, I think it's under 5 Bitcoin now, maybe under 4, but it's somewhere around there. So it went from like
Right.
600,000 Bitcoin to 4 or 5 Bitcoin for one house.
Right.
And over time, that number is going to keep decreasing and decreasing. So if you buy houses, let's say if you buy another rental property, even with the cash flows, even with the tax benefits, if you buy houses, the capital that you put into that house, the value of that house is going to keep decreasing in terms of Bitcoin. So you may as well just buy the Bitcoin, right? So let's say if you can afford the down payment for one house today and it's $100,000, instead of that $100,000 down payment, so like 20% of a house, you could buy a whole Bitcoin. In the coming years, that one Bitcoin is probably going to pay off the entire house. Instead of just being a down payment, it'll buy you the house. Then after another couple years, maybe you'll be able to buy multiple Bitcoin, multiple houses with that one Bitcoin. Then eventually you'll be able to buy 10 houses with that one Bitcoin, because it's going to keep, the value of Bitcoin is going to keep increasing because there's only a finite number of Bitcoin. So fewer and fewer Bitcoin are going to fewer and fewer Bitcoin are going to chase an increasing number of houses in the markets. With dollars, it's different because dollars can be printed out of nothing. They can keep being printed, meaning that over time, more and more dollars are chasing houses, so prices go up forever. And that's why I think we have a distorted view of where housing prices are going to go in the future.
Yeah, because it's being used as money, right? When it shouldn't be. We
It's
should
being
live
used
in our
as a savings
houses.
tool, yes.
Yeah,
Exactly.
land banking and things like that of the uber rich. Oh, I have 20 properties, but how soon will it be until they just figure out so much easier to just buy and hold Bitcoin, right?
Yeah. Yeah.
Can
And
can
Bitcoin's
you
a
can
better,
you talk about that a little bit? Yeah.
yeah. I was going to say Bitcoin's better as collateral as well. Because today,
Hmm.
one of the reasons why people buy a lot of houses is because they can borrow against them. So there are something like 10% of the houses in the US are unoccupied. And the reason why that's so relevant is because people own them. Nobody's living in them. They just have them because either number one, they probably use them as a savings vehicle. They can get a loan against them. They can just borrow against. They can go to the bank and they can tell them, "Hey, I have this land and I have this property. Give me a loan against it," and the bank will give it to them. So over time, as the value of the dollar decreases, so this person who owns these properties, they can keep borrowing against the house, but over time, the value of the loan that they have against that house keeps decreasing as the value of the dollar keeps decreasing. So they can consume today, and at the same time, they can own the house, they can own the asset. So they can keep consuming and they can keep owning assets, they can keep getting wealthier, and at the same time, they can keep enjoying their life. While on the other side, there are people who can't own a house. They can barely make ends meet. They can barely even buy groceries. It's again, it's a completely broken system. It's a system designed to incentivize the hoarding of houses, and morally, I think that's completely wrong.
Yeah. And there shouldn't be homeless people, right? If there's 10% of houses just empty, like why do we
Yeah,
have a homeless problem? Why do
yeah,
we have such wealth inequality? It's definitely fiat, right?
yeah. Especially newer
So,
generations. Like newer
yeah.
generations, they can't. They're going to struggle even more, right? So, are you a millennial?
No, I am Gen X.
Gen X. Okay, so Gen X, I think, did okay with
Mm,
housing because house
right.
prices didn't go that much. Millennials struggled more, but I'm a millennial. So millennials
Hmm.
struggled. Gen Z is struggling even more. Gen Z don't even think that they're going to be able to buy houses, right?
Right.
Gen Alpha, the one after
Yeah.
Gen Z, they're going to
Yeah.
struggle even more, right? And then what about
Yeah.
their kids? And then their kids, and then their kids. It's just going to get worse and worse. Nobody's going to be able to afford anything. We're all going to be eating low quality foods. We're going to be living in shoebox apartments. And is that the world we really want? People are going to be so demotivated to do anything. There's going to be no motivation to be productive.
Right. Yeah. My mother bought her house for, what was it? $27,000, and that's
Wow.
just unheard of. Like today. Yeah. It sounds ridiculous now. And, it wasn't in a great neighborhood, you know, but still right now, I think that property would be upwards towards, $350,000. And it's just ridiculous.
Yeah, I've seen ads for houses. So there was a house in Toronto where it was being sold for $8,000, maybe 50, 60 years ago,
Yeah.
and today it's worth like 2 million.
Yeah. Toronto, forget about it. Vancouver, forget
Crazy.
about it.
Yeah.
New York, LA, Miami, forget about it. So, let's talk about the ethical edge of this, because people always talk about the getting rich part, right? And they never talk about the ethical side. So beyond finance, you frame Bitcoin as a tool to dismantle rigged systems. How can Bitcoin adoption address systemic issues like wealth inequality or financial exclusion? And what ethical challenges might arise in this transition?
I don't know if it'll address inequality as much as it'll be fair. So there's still going to be people like it's like the Pareto principle where the top 20% own 80% of the wealth. I'm sure that'll continue. There are people today who have so much Bitcoin that they never have to sell again, and they're going to be the top 1%. Right? That's not going to change. So what I do think is though is that it's going to be a more fair system where instead of one group of people having to work for money and then the other one just being able to have it created out of thin air, that's going to be completely eliminated because you can't create Bitcoin out of thin air. You can create fiat out of thin air, and that's what breaks the entire system. That's what's made us in the situation that we're in today. So I think petty crime is a result of that, of people just not being able to afford the basics, and then they just rely on stealing from other people. Like in my area, there's a lot of carjackings now. A lot of people are just going. Yeah, they're coming at you at gunpoint and they're taking your car. Why is that? It's because the entire system is designed to make a certain group of people poor while the other group of people becomes richer and richer. So if you see somebody who's struggled their entire life, they see somebody driving in a brand new car and they can't even imagine being able to drive that car because they can't even imagine getting the loan to buy it. While this other person can drive it basically for free because they can go borrow against their house at a very low interest rate, and then they can pay back the loan by borrowing against their house again, so they can just keep rolling that credit card basically forward, right? So I don't know. I think it's just going to get worse. I think things are going to get way worse over time. And the moral issue here is that the system is designed to do this. So the way that money works today, it's designed to not make us value the future. We don't value the future anymore because the money that we have, we can't save for it. Right. We can't save for it. If we can't save for the future, then what's the value of the future? You can't do anything in the future. It feels like the world is just going to get worse. So if we know that today we can do something and tomorrow it's going to be way more expensive, we're not going to save to do it tomorrow. We're just going to do it today. It doesn't even matter if it's a lower quality decision. We're just going to do it, right? So we're going to make impulsive decisions. Let's say instead of saving for the future, instead of buying stocks, because stocks give you a 10% return. And if you buy stocks, then you're going to retire in 40 years. Who even knows if 40 years is going to happen? Right. Who knows if you're going to be alive in 40 years, right? So instead of saving in stocks because you're basically destined to work for 40 years, people want to they want to take shortcuts. I think that's partly why a lot of gambling happens today. People are sports betting. People are buying options. They're using leverage. And a lot of that, again, is because why would anybody want to retire in 40 years?
Right. I mean, I want to retire right now. That's the thing, though. When you live on Bitcoin, and I've seen it change my life, it's you have this backup and self-assuredness that, I'll be all right, especially looking further into the future, because in the future, my Bitcoin will accumulate. And just that thought that, as more financial chaos happens, Bitcoin grows, right? So I have that security that I feel that maybe I can do other things that I want to do instead of doing the things that I have to do and such, But it only just makes me want to stack more sats, right? Do things that I want to do to stack more sats. That's why I'm talking to Bitcoiners, because I love Bitcoin and I think we should spread the message like you do, and you do a great job on X. I enjoy very much. How are you so productive at this? How are you so prolific?
I do it full time. This is
Yeah.
my full time job. I post on X and YouTube.
Mm-hmm.
I post on it full time. I'm always thinking about it. There's always, I think one of the best things is that I can think about it. I can spend a lot of my time thinking about it.
Mm-hmm.
Most people can't really do that. Most people are doing a 9 to 5. They're working a full
Yeah,
time job, so
that's
their
true.
focus is on that full time job. So for me, I can actually spend a lot of time thinking about this, going through my thoughts, writing them down.
Recently, I saw a video of yours. You were discussing how just 1% of Bitcoin in your portfolio can make a huge difference, and it might even eventually end up being 90% or
Yeah,
almost 100. Like, can you
yeah,
break that down? You know, some people can
yeah,
understand that.
yeah, absolutely. So let me actually just share my screen on my end here. 1 second.
Okay, cool.
Share. Okay, so I have this spreadsheet here where I
Hmm.
did some calculations just based on some assumptions here. You can see here, if you have a 20-year time horizon, so this assumption is based on a 20-year time horizon. It's based on a 35% return for Bitcoin for 10 years, which I think is possible. A lot of people give me pushback on this. They think, oh, it's not possible. Bitcoin's not going to rise at 35% per year. I think it could go for 35% for the next 10 years, and I think that's actually conservative. And then
I
the
do too.
following 10 years, say another 30%, right? Because all the I think every dollar in the world can go into Bitcoin. Every little bit of wealth can go into Bitcoin. And I actually think these are conservative. I think the returns can increase over time because more people figure it out. Then we have more institutions that are allowing you to borrow against your Bitcoin. It just incentivizes you not to sell. So over time, in terms of fiat, the returns on Bitcoin are basically unlimited. And every single person on earth can buy Bitcoin. Then if we assume 7% returns on the stock market, so the stock market has given 10% returns and we subtract inflation, I think these could be the 35% and 30% are inflation adjusted. The returns on the stock market are also inflation adjusted. So the real returns the nominal returns on Bitcoin may be higher. This is nominal. This is inflation adjusted. So if you put, let's say in this case, if you start with a $100 portfolio, so if you have just $100, you put $0 in Bitcoin and you put $100 into stocks. You keep in mind
Yeah,
you can do this with any multiple. If you go with 100 grand, if you put a million, 10 million, whatever you want to, just multiply or sorry, divide whatever your number is by 100 and you'll get the right numbers. So if you start with $100, you'll go to $403.87 in the stock market if your portfolio grows at 10% per year, or sorry, 7% per year. So what that means is you'll start with 100% allocation to stocks and you'll end with 100% allocation to stocks. Now, if you go with a 1% allocation, that's $1 in Bitcoin. In 20 years, that $1 will be worth $609. Your stock portfolio, because you only put $99 into it instead of $100, your stock portfolio would still be worth $399.84,
hmm,
which I think is, you're not really losing much. I think that's great. You're
yeah,
not losing much, but you're also making this massive increase. So instead of your portfolio being worth $403 in the first allocation with 0% Bitcoin, you'd have $1,009 in the second one with 1% allocation to Bitcoin. So you get basically a 150% boost in your portfolio value just because you put 1% in Bitcoin.
1%,
1%, you get
1%,
100,
people.
and you get a 150% boost in your portfolio.
And
That's
if you
huge.
lose, you only
If you
lose
lose,
1%,
you end up with $399, right? You lose 1%. So you end up
right?
with $399. You go from 403.87 to 399.84.
It's
Not
the
really that much of
biggest
a difference.
asymmetric bet you can make. It's like, why not?
Yeah.
It's kind of ridiculous and unwise to not have Bitcoin at this
Yeah.
point. You
Yeah.
know, it's
Completely
more
agree.
dangerous to not have it than to
Yeah.
have it.
Yeah. And you can see here your final allocation,
Yeah.
60.4% versus 39.6%. So 60.4%, I think that's huge, right? You go from 1% to 60% because the returns on Bitcoin are so much better. If you go with a 2% allocation, you end up with 75% in Bitcoin. So $1,219 in Bitcoin, $395 in stocks. If you go to a 10%, actually, let's go with 5%. A lot of people like to do 5%. So 5%, you end up with 88% in Bitcoin. So over time, the more the more money you put into Bitcoin up front, of course, the more Bitcoin you'll have as a percentage. But the key here is the amount of Bitcoin that you have. So your portfolio is, of
In
course,
the
going to
beginning.
grow. Right? Your portfolio is, of course, going to grow. But if, let's say, you only put 1% into Bitcoin, you're never going to, at some point, you're never going to be able to buy the same amount of Bitcoin as somebody who puts 5% in today. Because Bitcoin is going to get so much more expensive, right? So let's say if you could, let's say you have $1 million today, you put $10,000 in Bitcoin, you'll get 0.1 Bitcoin. At some point, Bitcoin is going to get so expensive that you're never going to be able to get to 1 Bitcoin.
Right.
Never.
Yeah.
You can
And
only
you
get
often talk about getting to 0.1 Bitcoin, right?
Yeah.
Because
Yeah.
people think about Bitcoin, oh, it's $100,000. I can't buy that. What are you, crazy? So people don't know that they can buy partial or fragments of a Bitcoin, right? At any price point you want. $1, $5, $10, $100 worth. Can you break that down though? Because a lot of people new to Bitcoin don't understand why just even buying 0.1 or less of Bitcoin can be significant.
Yeah, of course. Each Bitcoin can be broken down into 100 million units. Sorry, I have a spreadsheet here somewhere. I don't know where it is, but each Bitcoin can be broken down into 100 million units. Oh, here it is. Satoshis to Bitcoin. Each Bitcoin can be broken down into 100 million units. At one point, I actually have the prices here as well, which is pretty cool. So at one point, you can buy a whole Bitcoin. So 1 Bitcoin for 1 cent. You could buy 100 Bitcoin for $1. So you could buy 100 million Satoshis for 1 Bitcoin is worth 100 million Satoshis. So at this point, you could buy 10 billion Satoshis for $1 or 100 Bitcoin. This is in February of 2010. You can break it down into smaller and smaller pieces. So you can get 0.1 Bitcoin, you get 0.01, 0.001, and it'll keep dropping. At one point, you'll be able to get 1 Satoshi for $1. Of course, the purchasing power of that dollar is going to be much lower at that point, but it won't. Let's say, for example, what is it? 100. So that's 1,000 times from here. So if 1 Satoshi goes to $1, that's 1,000 times return from here. So what that means is, if your Bitcoin is worth 1,000 times what it is today, the real purchasing power will be a little bit lower than that, right? Because the US dollar is going to decrease in purchasing power. So what that means is, let's say the US dollar loses 80% of its value in that time. By then, your Satoshi will still be worth significantly more than what it's worth today. What is that? 1,000? What's 1,000? So it'll be worth 200 times more than what it's worth today. 200 times, 200x. So that's crazy.
Wow.
So okay,
And what date is that by?
Sorry?
And what date is that by? By what date?
I have no idea, to be honest. I don't know when it'll happen. It'll happen at some point.
Right.
Nobody really knows, right? This is an older
Following a
spreadsheet.
trend. Right.
Right. So this is an older spreadsheet. I made this. So Bitcoin's price went up to 110K or so, and then it came back down. I made this spreadsheet around when it was coming down. So at that time, 1 Bitcoin was 77,000. 1 Bitcoin was $77,000. Today, 1 Bitcoin is like 105, 104,000. So if we take a look at this, so Satoshis per dollar, at that time, you could buy 1,299 Satoshis per dollar with US dollars. So you could buy 1,299 Satoshis for 1 US dollar. Today,
Right.
Bitcoin's back up to 105K. So you went from being able to buy 1,299 all the way down to 952 Satoshis for
Yes.
$1.
Yeah.
And over time, that's going to keep increasing. So like I said before, at one point, you could buy 100 Bitcoin for $1. 100 Bitcoin. Then you could buy 10 Bitcoin for $1. This was in July. So it went from February 2010 to July 2010 from 1 cent per Bitcoin to 10 cents per Bitcoin. Then February 2011, it's up to $1 per Bitcoin. And think about it. Everybody on earth can still buy one Bitcoin for $1. But the thing is that because Bitcoin has a finite supply, anybody who doesn't buy it here, eventually the
Mhm.
price, the Bitcoin will run out at every price. So eventually the number of sellers who are willing to sell for $1 are going to run out. And we saw that play out. From February to June, Bitcoin went from $1 to $10. Then from June to April 2011 to April 2013, it went to $100, then 1,000, then 10,000, then over 100,000, right? Eventually it'll hit 150,000, then it'll hit 250,000, then it'll hit 1 million. It's going up forever because the number of dollars that chase Bitcoin will increase forever, and the number of Satoshis that you can buy per Bitcoin will decrease forever. So today you can buy 950 or so Satoshis per dollar.
Right.
At 150K, you'll only be able to get 667 Satoshis per dollar.
Hmm.
Then 400 Satoshis per dollar at 250K. Then at 500K, 200.
Yeah.
Of course, at 100 million, you'll only be able to get one Satoshi for each dollar that you have.
And no, I see it. You're preaching to the choir here, meaning you're already talking to the converted. So let me play devil's advocate, if you will. So my family, we're trying to bring our resources together, right? Let's say a hypothetical family. And just like Michael Saylor said, individuals are strong, but, families that can gather their resources are powerful. I was on the bend of if we all just invest, pool our sources together, and we all just invest into Bitcoin every month, what we can, we'll come out way better than the other idea. So let me just say, so I have a lot of realtors in my family. Hello, Khadija. She's a realtor and she believes that, real estate is the way. Not to knock it because she's good at her job and she knows what she's doing. But I think that if we just stack Bitcoin and let that appreciate, it would be less effort and appreciate far greater than if we bought real estate and flipped it. What do you
Yeah,
think?
I
Are you still
agree.
with me?
Yeah, I agree. What I would say is do whatever you need to make money. I don't really care what you do to make money as long as it's legal, right? This is something that somebody named Chris Johnson, not sure if you know him, but he says this regularly. Do whatever you can to make money, whether you're trading options, you're trading stocks, you're working a 9 to 5, you're working at a grocery
Right.
store, whatever you can, use it to make money. You're cleaning toilets, you're doing book reviews, whatever you're doing, you're creating YouTube content, creating X content.
Hmm.
Doesn't matter what you do to make money. Just put a portion of it into Bitcoin.
Hmm.
If you're a realtor, you're using that to make money. Perfectly
Hmm.
fine.
Right.
Keep getting your cash flow. Use it to buy Bitcoin, right? It doesn't matter what you do to make money. Like I said, as long as it's legal,
Right.
keep doing it and stacking Bitcoin because eventually, whatever you're doing, let's say, okay, we're content creators. I'm a full-time content creator.
Hmm.
Eventually, I'm going to get disrupted by somebody who's way better than me, who's creating way better content than me. At that point, my business may die off. But if I buy Bitcoin, nothing disrupts Bitcoin. Nothing can
Right.
disrupt it. Nothing can stop it from working
Right.
the way it is. Right. So at that point, I can use, let's say my business dies,
Hmm.
I can use my Bitcoin to either improve my business or I can just retire and I can use the Bitcoin to pay for my lifestyle.
Right. Yes, I think many people don't understand the difference between what they have to, well, she does because she's a realtor, but, with Bitcoin compared to real estate, just holding Bitcoin or buying real estate and the things you have to worry about, tax, flood, fire damage, renters that damage your house, repairs, fees, unthought of expenses, and things like that. If it's honestly, you even have Grant and Gary Cardone saying, if you already have a house to live in, don't buy another house. And they made their hundreds of millions on real estate. And they're saying this. And honestly, there's more to life than just money and Bitcoin, right? You want a family, you want to have a nice place to live, you have hopes and dreams, you want to, go to the prom, you want to meet a nice woman, get married, have kids, all those great things. But, financially speaking, if you're talking about what's a good financial decision, buying a house is probably not the best financial decision because it's a losing asset. It's, depreciating asset in the fact that you have all these unforetold expenses and costs and taxes and things like that. But if you go into it understanding that and knowing that, then sure. But some people just go into it believing this is just a win-win when it's not. You understand what it is. Of course you want lifestyle tickets, which Bitcoin can afford you to do. I just, you're the guy, you're the real estate Bitcoin guy. So I really wanted to hear, like, what's the major pushback you get from people when you talk about Bitcoin versus real estate?
Everybody says you can't live in a Bitcoin.
Yeah.
I think that's the thing that people say that way too often, and it just shows you that most people don't understand the argument. Okay, you can live in a house, but that doesn't mean that house prices should go up forever. Because you can build more houses, supply can always increase, demand can decrease, right? If fewer people want houses, then the price of houses is going to decrease. It doesn't matter if you can live in it. Let's say you buy a rental property, and then let's say you buy a rental property, and then right next to you, a mega condo opens up, and there's 500 units. Now the value of your rental property is decreased because there's a substitute. Even though you have a house, let's say you have a single family home, you can rent it out to someone. Now whoever is your tenant can potentially buy, or they can potentially rent a unit in this mega condo, or they can buy a unit in the mega condo for a fraction of the price of the value of the house. The main thing here is, of course, I get it. People want their own privacy. People want their own shelter. They want to be separate. I get all that. But the point here is that if the price of housing goes up too much, people are only going to be able to afford smaller and smaller units. So if you charge way too much in rent, it doesn't matter if you're the only one who has a property. If people can't afford it, they're not going to get it, right? They're not going to take it. They're not going to rent your property. So there's a possibility that your property could be left vacant for a very, very long time. And you may not find a renter for a very, very long time because there's always a substitute. Somebody else can rent a property as well. Somebody else can rent out their property, and there's always a substitute for your specific property is not guaranteed to be rented. Just because you think that, okay, people need a house to live in, they could find other houses to live in. They could find other properties to live in. They don't need to rent your property. So I think it breaks the argument that houses, you need a house to live in. Of course you need a house to live in, but there are substitutes to houses. There are no substitutes to Bitcoin.
Yeah. Great point. This is a revolution, right? Bitcoin's a cultural revolution. How do you see the mindset shifting culturally with the attitudes towards wealth in communities, especially, like, I don't know your background, where your family is from. India, right? So I believe Indians have like most people, have a high priority on like housing, and it means a lot to the community.
It's a savings vehicle,
your legacy. Your savings vehicle. You save, it shouldn't be, but it is, and that's how the world is and was for a long time. Real estate is deeply tied to family legacy. How do you imagine that changing, if at all?
I mean, if you go to India, people are saving in gold, right? It's not like people aren't saving in gold. When I went to India a few months ago, I think it was in February to March. Yeah, February to March. So I went to India, and in India, there are banks that are offering loans against your gold. You can give them your gold, and then they'll charge you a low interest. It wasn't, I mean, actually not, I don't know if it was low, but in India, it was 8.9% or something like that, which is pretty good.
Great. A Bitcoin loan right? is like 12%, 13%.
Yeah, exactly.
Yes.
So you could give them your Bitcoin, or you could give them your gold. They'll lend you rupees, and you can spend that on whatever you want to. Right? So it's not like people need to buy houses. I think here people just believe that houses will go up forever. You can rent a house if you want to. In India, I mean, people already have so much gold, right? I mean, it's just a replacement. People can easily replace Bitcoin with their gold, but you have to understand it. That's the key. If you don't understand how Bitcoin works, if you don't understand how gold works, if you don't understand why gold is even valuable in the first place, then of course you're not going to make the switch.
And what do you think is the first?
Education. It starts with the education.
Right, right. The Bitcoin education. So what do you think is the most difficult thing for people to understand about Bitcoin? Why is it so hard?
So there are probably a few things. I mean, number one, there are so many topics that you need to understand in order to understand Bitcoin, right? You need to understand psychology, you need to understand economics, you need to understand how money works, and most people don't know these topics in depth. There are a lot of people who, okay, so let's say for example, we have that op return thing that people are arguing about. I think there's two camps of people. Number one, there's people who just want to do cool stuff on Bitcoin. They want to
Hmm.
use Bitcoin to just make a cool database of cool things. And the number two is there are people who only want to use Bitcoin as money. So the people
Right,
who don't want spam on the Bitcoin blockchain, they only want to use it as money. They only want to use it to send and receive value. While on the other hand, people who are focused on tech who don't I don't know if they completely understand economics. I don't know if they completely understand how money works. I don't know if they even understand the functions of money. But the money is not supposed to be something that carries around JPEGs, right? So those people they want to use Bitcoin to do other things. And again, that comes from a lack of truly understanding all of these different topics, economics, psychology. There's a bunch of different topics you have to understand. You have to understand how energy works. You have to understand a bunch of different things and just understanding how computer works how so there are people who have a computer science degree, a background with computers. They've been working as programmers for their entire life,
yeah.
but they don't understand Bitcoin because they don't understand economics,
And
right?
oddly, a
So
lot of economists don't understand it, which
yes,
is
because economists don't
Keynesian.
understand the basics of computers, right? There are a lot of
Could be.
economists. Actually, I don't even know if they don't understand it. I think at this point, if you're an economist and you don't understand Bitcoin, you're just being ignorant, right? Or you're doing it intentionally because your paycheck depends on the fiat currency financial system. So either way, I mean, it's people need to study harder or they need to
Yeah,
stop lying to themselves because they're just ruining their reputation. This is going to be around for 50, 100, 200 years. And the people saying that, okay, Bitcoin is going to zero, like Peter Schiff. Peter Schiff's going to be remembered forever as a loser.
biggest
Nobody's going
loser.
to remember him in a good light, right? Bitcoin is not going away. Peter Schiff thinks that Bitcoin is going away. He's going to continuously tell people not to buy Bitcoin. And at some point, like we said, Bitcoin is going to a million, it's going to 10 million, it's going to $100 million. It's going to keep rising forever. So the people who listen to him and don't buy today, it's like we were talking about before. If you could put 1% of your portfolio in it, let's say you can get zero point 0.1 Bitcoin or
Hmm.
0.01 Bitcoin.
Hmm.
At some point you're not going to be able to afford those amounts because when Peter Schiff first started talking about negatively about Bitcoin, I think it was worth like a dollar, $10, something like that. Think about all the people who he stopped from buying a whole Bitcoin.
Right.
Those people are going to remember forever.
Yeah, and how damaging that was.
Right.
Yeah,
And they trusted him. They trusted him. They thought that he did his due diligence, but he clearly didn't. And it's people like him that kind of the adoption behind they put it they make us feel like we're behind. They
yeah,
bring adoption back. They bring people not they make people not adopt Bitcoin. And it's so negative for Bitcoin, of course, but it's also
yeah,
negative for their finances. It's negative for the world. So those people maybe they're continuing to buy random assets that maybe they wouldn't have bought if they bought Bitcoin.
Who's that wealth advisor that looks like Dr. Phil? He says that too.
Oh, David Ramsey. Dave Ramsey.
Yeah,
He's a
Ramsey.
constant.
He's
Yeah.
totally missing it. And, usually, he gives sound advice on finance. I used to listen to him often, but I totally checked out when he dismissed Bitcoin and the people who, invested in it are
Yeah.
as dumb. It's like,
That's how it is. Yeah.
man, you're just, wow. So many smart people are just so intellectually lazy when it comes to Bitcoin and just so easy to dismiss it. But look at the last 10 years. So you don't even have to look at the whole lifespan of Bitcoin. You can look at the last 5 years, whatever span, 1, 3, 5, 10, 15. Everything we've said is coming to fruition. It's coming true. It's, all the way back to the inception of Bitcoin. We were right. The cypherpunks were right the whole time. Look at the bond market now. Look at the stock market now. Look at how the budget, the debt we have. They're going to add how many more trillions? It took 220 years to get to 12 trillion. It took only like 4 years to add 12 more to it. This is out of control. Like, how don't you see that? I don't see how people don't see that and see like we need something with a limit. We need sound money. We need real hard money.
I think people are
You
just
know,
busy, right? They're working their 9 to 5. They're
yeah,
continuously working.
check to check.
They're on the treadmill. They have to work. They're in the rat race, so they don't have
Right,
time to study Bitcoin, right? I mean, if you have starving kids at home, how are you going to spend your time studying Bitcoin? You have to work
right.
more. It forces you to keep working and working. You can't really
Yeah.
blame them either because it's not their fault. I mean, it's not
No,
like
you
they're
can't
doing it
blame them.
intentionally. Like they don't want to be poor, right? But it's just the system is designed to make them poor because in the current financial system, people have to be poor in order for other people to be rich. If Jeff Bezos owns 100 rental properties, that means that there are other people who can't own properties because of course he owns 100 properties. That's 99 people who can't own properties to live in because he owns 100 of them. He owns way too much compared to what he needs. So, and that just feeds into the poverty. It just feeds into people being poor and people not being able to save for the future and struggling to make ends meet. It just feeds into it because that's just how the
Right,
system is designed.
right. Fiat is built on, winner take all or winner take most. And it's just a dissolving, deteriorating thing. If you're not close to the money printer, the cotillion effect, if you're not close to the money printer, you're going to get damaged by it. And that's most people in the world, right?
Yes.
So we spoke about gold earlier, right? Bitcoin versus gold, like beyond the scarcity, like what unique attributes of Bitcoin make it a superior store of value compared to gold in a hyper digital future that we're in right now?
But it's the only thing that's digital that has scarcity. Everything else, it's decentralized. Nobody controls the supply. So it's the only thing that has scarcity and it's decentralized, right? So nobody can create more Bitcoin if they wanted to. If they just wanted to add more supply to the Bitcoin network, they can't. Gold is very similar. So to create more gold, it's very difficult. This is a concept called proof of work. So anytime you want to make more Bitcoin, you have to do the work to produce it. So you have to buy the equipment, then you have to learn how to do it, then you have to put that time, energy, and effort towards the Bitcoin network. You have to use energy, and keep in mind, you may not even be rewarded, right? Even if you buy the miners and you connect them to your internet, your network, you connect them to the energy supply, you may not get more Bitcoin. But the chances, so if you were to mine a block, if you were to put in the effort to get the equipment, to get the knowledge and all that stuff to mine a block, you'll get 3.125 Bitcoin if you get lucky. But the chances of that are very, very low. And let's say over the next 10 years, you may not even mine a single block.
Right.
But if you were to just put in the work and go to a job, stack as many dollars as you can and convert them into Bitcoin, you have a much higher likelihood of being able to
Mm-hmm.
accumulate Bitcoin. Very similar
Mm-hmm.
to gold, right? If you just keep digging around the world, you keep digging holes into the ground, it's very low likelihood of you finding gold. So you may as
Right.
well do the work, be creative, or sorry, be productive,
Mm-hmm.
exchange your dollars, exchange your savings for gold. I think that's a much better way to do it. They're very similar because, I mean, of course, gold is physical. You can use it in industrial products, but we've been using it as money because it's scarce. We haven't been using it in money because it has the industrial purposes. We've only been using it as money because it's scarce. We haven't even been using it as money. We've been using it as a store of value. Store of value is just one of the functions of money. Nobody uses Bitcoin, or nobody uses gold to transact. Nobody uses gold to account for value. They don't price things in gold. So because gold is physical, because it can't be transported very easily, we've had to use paper currency to replace our gold as money. And that, again, that's the entire problem. The fact that you can't send your gold around the world, that's the problem. Because if you wanted to pay somebody, let's say I wanted to pay you, for example, I
Mm-hmm.
wouldn't be able to pay you with gold unless I'm right next to you. So I need to use fiat currencies to pay you because if I want
Right.
to interact with people around the world, there's no way to do e-commerce with gold because gold is physical. On the other hand, with Bitcoin, so Bitcoin has all the characteristics that gold has. It does better than gold with those same characteristics. But then on top of that, it's way more portable. It's way more scarce. We have no idea how much gold will really exist. but we do know exactly how much Bitcoin will exist. We do know exactly how to send Bitcoin across the world. I can just scan a barcode and I can send you Bitcoin from here to where you are, but you can't do that with gold because gold can't be put on the internet.
Come on, Rajat. My grandma, she's not going to get this, man. She's not going to understand. You know, all the learning era is over for her. She's past that point. We need to make it easy. How is this going to happen?
I don't know how much easier it'll get. I mean, over time, it'll just get better. It will get better for sure. But I think it'll just take time, right? At the end of the day, we have a limited amount of time on Earth. The people who are rejecting Bitcoin, who can't accept Bitcoin, who don't have the background with computers, who doesn't understand how computers work. I mean, eventually they're going to pass away, right? Future generations. So the way that I see it, older people may not be able to understand Bitcoin, but younger people are going to overwhelmingly be able to understand Bitcoin. There are way more people who are younger going to be able to understand Bitcoin than the people who don't, right? Because younger people are on the internet all the time. You're on the internet all the time. I'm on the internet all the time. So we see the value of a digital store of value. Anybody who doesn't use the internet regularly, they're probably not going to look for a digital store of value, right? Because they're in the physical world. Because we live in the digital world, we live in the physical world. We're living in both. We understand the value of a store of value. So we're going to put in the time to actually understand how to use it, to understand how to store it. There are going to be generations that don't. They're going to miss out. And I know this sounds harsh, but eventually they're going to pass away. Eventually they're going to pass away.
We all will.
It's a fact of life, exactly. I think we're going to see a lot more people owning Bitcoin in the future, and they're going to be younger and younger. Like there's going to be 12-year-olds who have Bitcoin wallets, 10-year-olds, 5-year-olds who have Bitcoin wallets because their parents make a wallet for them, right? But let's say if you go to your grandma and you tell her, hey, I'm making a Bitcoin wallet for you, she's not going to really care.
Yeah.
And over time, of course, older generations are going to pass away. I think that's okay. That's just how revolutions happen.
Yeah. So let's say we're looking out into the future and Bitcoin does take over. Hyper Bitcoinization happens. You know, it's hard to imagine for most people, myself included, but how would that world look? Do we need banks? Will we have central banks? You know, how would we interact with each other in the enterprise corporate world as well?
I think it'll just be wallet to wallet, right? Peer to peer. That's the point of Bitcoin. It's peer to peer. You can send Bitcoin across to other people. There are other cryptocurrencies that, let's say, for example, XRP, they rely on banks. They tell you XRP is the only one that banks are going to adopt.
Right.
But with Bitcoin, it doesn't matter. Right? Everybody can adopt Bitcoin, right? Companies can, like there are already companies who are adopting Bitcoin. If they wanted to, they could pay for their resources with Bitcoin. They could pay for their raw materials with Bitcoin if they wanted to. And I don't see that being a problem. It's the same thing as scanning a barcode, right? You just scan a barcode, you send your Bitcoin over to whoever you need to, and that's it. It's that simple. I think it'll just get easier and easier over time, right?
Yeah. It feels like we need an institution or protocol might emerge to manage disputes or economic crisis, but it's like, you know, it's a different paradigm when you're talking about rules without rulers.
Why do economic crises even happen? I think let's go to the root cause. Why do economic crises happen? They happen because of people. They happen because people are emotional. We borrow way more money than we need. We bring our future consumption to the present, and it's not sustainable for a very long time. So when that happens, eventually we can't pay back our debts. There's defaults, and then the banks who have the most debt that's defaulted on, they collapse. And now, I mean, the system is becoming more and more fragile, right? So if somebody doesn't defaults on their loans, then the entire system could fall apart. If one loan is a default, then the entire system could fall apart. It's a house of cards at this point because there's no real money in the background. The entire system is just built on fake money. So because it's fake money, we know that more money can be created out of nothing. We know that we can borrow more money. Banks are willing to give more money out. They're able to be more reckless with their lending. And with Bitcoin, you can't do this because with Bitcoin, you're not going to be lending. Banks aren't going to be lending money to anybody. They're not going to be lending out unsecured debt, right? They're going to lend money to businesses. They're going to lend money to people who want to create something of value and then they can pay it back in the future. There's going to be actual risk involved for banks with Bitcoin, but with Fiat, there's really no risk involved. So they can just lend out money to anyone. They can gamble as much as they want to.
I 100% totally agree. Totally agree. Where should we take it from here? Yeah, you know what? I do have a thought. So let's say I'm a super mogul. I have a lot of real estate. You've suggested selling to buy Bitcoin, but there's a lot to that. Let's say if I had 10 properties, excluding my residence, what do you recommend? Should you stagger that out or just dump it all now and dump it all into Bitcoin now?
I think for the long term, the best decision would be to just sell it, because over time, if you can buy let's say you could buy 10 Bitcoin with those 10 properties, you have $100,000 equity in each one. You can
Hmm.
buy 10 Bitcoin today. Eventually, you'll only be able to buy five. Then you'll be able to buy three. Then you'll be able to buy one. Eventually, you'll be able to only buy 0.1, 10 million Satoshis. So I would say do it ASAP, because over the long term, you're going to benefit.
And maybe dump it in, put a large chunk, maybe 80% into Bitcoin and maybe 20% into another money making vehicle so that you can get more Bitcoin, right?
But why do you need more Bitcoin at that point if you have 10 Bitcoin?
I mean,
You can just live your life, right? I would say
what's enough?
start a business, right? If you want to, maybe put 20% of it into a business. I mean, if you really want to, but I don't know if you need more Bitcoin at that point, right? You can just live your life.
All right, Rajat, here's the lightning round. Michael Saylor, a genius or dangerous to Bitcoin?
I think he's a genius. I think MicroStrategy is going to be the highest valued company in the world within the next decade, because they have so much Bitcoin. Everybody in the world is going to compete to get Bitcoin, and essentially everybody's working for MicroStrategy. When they buy Bitcoin, they're increasing MicroStrategy's revenues, they're increasing MicroStrategy's value. So over time, the treasury that MicroStrategy has is going to continue to rise and rise and rise until, again, like I said, they're going to be the most valuable company in the world. I think he's a genius.
I do too. Proof of reserves. Is it
That's it.
needed or we don't need it?
I mean, if you're going to invest in MicroStrategy and you want to force them to do something, then you shouldn't be investing in MicroStrategy. That's one of the things, right? With a publicly traded company, the CEO, the board of directors, they get to do what they want to. One shareholder doesn't get to determine what they do, right? If Michael Saylor says that he doesn't want to and he has control of the company, then he doesn't have to. If you don't like the fact that he doesn't show proof of reserves, then don't invest in his company.
Exactly. What's your price target for 2025?
I think we could hit any number really, because eventually Bitcoin is going to run out at every price, even at 105, 106K. It's going to run out, right? I think it's already done under 100K. I don't know if we're going to go below 100K again. Maybe we do. I don't know. But at some point, we're going to get to these levels where people just can't even imagine being there. At some point, we could hit 1 million. We could hit 10 million. For all we know, we could hit 1 million by the end of this year if there's enough of a supply shock, right? If
Okay.
there's enough demand, enough people who want to buy Bitcoin, then we could hit 1 million by the end of this year. But we could also go all the way down to 10,000. Let's say Satoshi just sells all of their coins. We could also go to 10,000. I mean, I would be surprised. I think a conservative estimate here would be probably 200K. Maybe we peak at 200K.
200K. Okay.
Maybe, yeah, maybe.
Next question. Who's going to give Saylor a run for his money? Metaplanet or 21 Capital?
Definitely Metaplanet. I think they have their focus, but honestly, I don't understand. I don't know what their accumulation strategy is. I haven't really done the work to understand it, so I really wouldn't be able to. I don't know. I don't know if somebody could. I don't know if anybody should use my advice here as or
Financial
what I'm saying
advice.
here as advice, just because
Right.
I don't know. But I think Metaplanet, because they said that they're going to be buying like 200,000 Bitcoin or something by the end of 2027. They're not even going to be close to where MicroStrategy is, but it'll just get harder and harder for other companies to buy Bitcoin.
All right. Last question. Bitcoin power law. Real or fake?
I don't know. I don't know enough math. I feel like we haven't. So in the past, the Bitcoin price was determined by retail.
Mm-hmm.
So because of that, I don't know if the power law really impacts it, because retail doesn't have the same ability to make money or to create money out of thin air as institutional investors. So institutional investors can create more and more money out of nothing. Retail investors can't really do that. Retail investors are more emotional. Institutional investors make a decision and they stick to it, right? They're going to hold on to their Bitcoin list literally forever if they have to, or if they can. So it's a little bit different. I don't know if the power law is going to apply. Who knows? Maybe it does. Maybe we're all surprised that it does. Maybe it's completely accurate, but I don't know.
Okay, the really last question. Bitcoin cycles, are they done or not?
I think they're done. I think things have changed completely. Like I said, institutional investors think differently. They act differently from retail investors. So there's less emotion involved. They may not even sell their Bitcoin. They may not have to. They're putting themselves in the position where they don't have to because they can borrow against it.
All right. Rajat Soni, everyone. Thank you for coming on. We're doing the part 2 soon, I hope.
Absolutely.
All
Awesome.
right. Take
Thank
care.
you so much for having me on, man.
Thank you. See you guys next video. Signing off.
Awesome.